This podcast is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research before making any investment decisions. Good morning, guys. Hope everyone's doing well. So, today I want to talk about something I've been getting questions about pretty consistently lately, and that is STRC, Strategies Preferred Stock. A lot of you have been hearing the ticker thrown around, seeing it pop up in dividend screeners, and wondering what it actually is and whether it belongs in a dividend portfolio. So let's just walk through the whole thing from the ground up, and then I'll tell you exactly where we stand with it in our own portfolio. So, first things first, what is STRC? Strategy Inc., which is the company formerly known as MicroStrategy, you know the one, Michael Saylor, Bitcoin maximalist, the guy who basically turned a software company into a Bitcoin holding vehicle. Strategy currently holds over $48 billion worth of Bitcoin on their balance sheet. That's not a typo. 48 billion. It is the largest corporate Bitcoin holder in the world by a fund. All of that Bitcoin accumulation, Strategy has been creative about how they raise capital. They've issued convertible notes, they've done equity offerings, and more recently, they've been issuing preferred stock. STRC is one of those preferred stock issuances. And the reason dividend investors are paying attention is that it pays 11.25% annually in monthly cash dividends, and the price barely moves. Let me walk you through what that actually means because it's pretty interesting. So, preferred stock is a class of shares that sits between common stock and bonds in a company's capital structure. It's not the same as owning regular shares of Strategy. Common stock, which trades under the ticker MSTR, gives you ownership in the company and upside if the stock price goes up, but no guaranteed dividends. STRC is different. It's a preferred share, which means you're higher up in the priority order when it comes to getting paid, but you don't get the wild price swings of common stock. STRC has what's called a stated value of $100 per share. The idea is that it should trade right around that $100 level. And if you look at the data, the 52-week range is $90.52 on the low end and $100.42 on the high end. That is a remarkably tight range for something that is ultimately backed by Bitcoin. Right now, it's sitting at $99.37. So, yeah, it pretty much just hugs that $100 level. And while it's doing that, it's paying you $11.25 per share per year in monthly installments. That works out to roughly 94 cents per share per month. Now, the yield based on current price comes out to about 11.27%. That's meaningful income. Now, here's where I want to get into the actual structure, because there are some things people gloss over that you absolutely need to understand. STRC is what's called a perpetual preferred stock. Perpetual means there's no maturity date. It doesn't convert. Strategy doesn't have to redeem it at any set point in time. They can redeem it if they choose to, but they're not obligated to. So you're not buying this expecting to get your $100 back on a specific date the way you would with a bond. You're buying it for the income stream, and that stream continues indefinitely, as long as Strategy keeps paying it. And that's the key word, as long as they keep paying it. Let me be really clear about this. STRC dividends are not guaranteed. They are declared by Strategy's board of directors on a periodic basis. If the company hits financial stress, and there are scenarios where that's possible, they can suspend the dividend. They are not legally required to pay you. This is a major distinction from a bond, where missed interest payments trigger a default. With preferred stock, they can simply pause distributions without it being a technical default. Now, why would they stop paying? That's where the Bitcoin backing matters. STRC is not backed by a diversified business with multiple revenue streams. It's backed by the fact that Strategy holds an enormous amount of Bitcoin. If Bitcoin drops 60% and stays there for an extended period, Strategy's balance sheet takes a massive hit. Their ability to service all their obligations, and the preferred stock is junior to their debt, starts to come into question. Let me explain that capital stack for a second because it matters. Strategy has debt at the top. Senior secured creditors get paid first if things go wrong. Then there are other obligations. Then there's the preferred stock, and within the preferred stock, there's a hierarchy. There's STRF, which is their senior preferred, and STRK, which sits above STRC in priority. STRC is the most junior of the preferred shares. That means in a worst case liquidation scenario, STRC holders would only get paid after the debt holders, after STRF holders, and after STRK holders. Only then, if there's anything STRC holders collect. So, why does STRC pay the highest yield of the three? Because it carries the most risk within that preferred stock structure. Higher risk, higher yield. That's the trade off. Now, with all that said, and I want to be balanced here, the bull case is also real. If you believe Bitcoin holds value over the long term, if you think Bitcoin at current levels is reasonable and that it trends higher over the next few years, then Strategy's balance sheet remains extremely healthy. 48 billion in Bitcoin is a lot of collateral. Even if Bitcoin pulled back 30 or 40% from here, Strategy still has an enormous asset base. It would take a catastrophic and sustained Bitcoin bear market to genuinely threaten STRC distributions. And this is exactly why we have a position in it. So let me walk you through where we stand in our portfolio right now. We're holding 521 shares of STRC at an average cost basis of $95.93 per share. Current price is $99.37. So we're already sitting on a small unrealized gain there, which is actually nice because the price stability is kind of the point. The position is worth just over $51,000 right now, and at 11.27% yield, that's generating about $5,863 in annual income. We've already received $1,370 in distributions since we opened the position, and those monthly payments have been consistent. Now, here's the comparison I know a lot of you are thinking about, because these are three tickers that often come up together when people are looking for Bitcoin exposure with income. STRC versus CONY versus MSTY. Let me just walk through the numbers on all three, and the difference becomes pretty clear. CONY, which is the Yield Max Coinbase Covered Call ETF, is currently trading at $27.25. Its 52-week range, $23.43 to $120.20. That is not a typo. It went from $120 to $27. The yield right now is sitting at a massive 211%, but the 5-year dividend growth rate is negative 46%. The price CAGR over 5 years is only 7.6%. So while you were collecting those giant distribution checks, the value of your shares was quietly evaporating. MSTY, the Yield Max MicroStrategy Covered Call ETF, is even more dramatic. Currently at $22.89, down from a 52-week high of $128.75. The yield being advertised is 285%, but the 5-year dividend growth rate is negative 72.8%. That's the NAV erosion problem I've talked about in previous episodes. The distributions look enormous on paper, but the underlying share price is collapsing, so the absolute dollar amount you're collecting every month is shrinking significantly. And this is the fundamental problem with covered call ETFs on volatile assets. The strategy caps your upside when the stock rips higher, but when the underlying asset falls, the NA bleeds out. You get a double whammy. The covered call premium income shrinks as volatility changes, and your principal is quietly disappearing. STRC doesn't work that way. It's not a covered call ETF. There is no option strategy eating away at the underlying. It's preferred stock with a fixed yield tied to a stated par value. The income mechanism is completely different. You're not getting your own money returned to you as a distribution. You're getting an actual dividend payment generated from Strategy's ability to run their business and manage their balance sheet. The yield is contractually set at 11.25% annually. Now, is 11% as exciting as 200%? Obviously not. But 11% that's actually 11% is a completely different animal from 200% that's really maybe 60% in real terms after you account for the NAV bleeding out underneath you. And where does STRC fit relative to our core positions? So look, let me just give you a sense of the scale here. Our biggest position by far is SCHD, Schwab US Dividend Equity ETF, ticker SCHD, which is sitting at nearly $400,000 and generating just over $13,000 a year in dividends. That's our bedrock. Then we have VOO at about 254,000, VTI at 131,000, JEPQ at 116,000, generating 12,400 a year, JEPI at 114,000, generating 9,000 a year, and BTCI, NEOS Bitcoin High Income ETF, is also a significant position at about 112,000. STRC at 51,000 is more of a satellite position. It's meaningful, but not so large that it would break the portfolio if things went sideways. I think that's the right way to size it. You don't want STRC to be 20% of your portfolio because the risk profile is too concentrated in one company that holds Bitcoin. But as a satellite holding, call it 3 to 5% of the total, it adds a nice income component with a very different character than what you get from the covered call ETFs. The whole portfolio right now is valued at just over $1.3 million and generating about $99,000 in annual dividend income. So $5,800 from STRC is a real contributor, but it's balanced within a broader, more diversified structure. So what's my honest take? Am I adding more? I'm watching it. I'm not aggressively adding right now, and the reason is just position sizing discipline. We're already at $51,000 in a single preferred stock backed by Bitcoin. That's enough exposure to this specific risk. If Bitcoin pulls back significantly and STRC dips toward the $90 to $92 range, I would probably get more interested in adding shares. At $91 or $92 with an $11.25 annual dividend, your yield on cost starts to become quite compelling. The other thing I'll say is that STRC is still relatively new. It doesn't have a long dividend history. We're showing 0 consecutive years by traditional metrics because it hasn't been around long enough to build that track record. I want to see how the company handles payments through a full Bitcoin cycle before I get too comfortable sizing this up significantly. But for what it is, a monthly income payer with stable price behavior in the Bitcoin ecosystem, it does things that CONY and MSTY simply don't. The NAV is holding, the dividends are consistent, and the yield is real. If you're someone who wants some Bitcoin adjacent exposure in your dividend portfolio, but you've been burned by the NAV erosion in covered call ETFs, STRC is worth understanding. It's not perfect. It carries real risk. But the structure is fundamentally different from what YieldMax is doing, and I think that difference matters a lot over a multi-year holding period. And speaking of tracking positions like this, if you want to screen for high-yield dividend stocks or monitor your monthly income the way I track, check out retireearlywithdividends.com. It's completely free. I built it specifically to help dividend investors find, analyze producing positions